Welcome to your weekly market update. We have a lot of activity going on, but I wanted to show you first, before I go to the charts, why this is such an amazing time to buy a home. There's opportunity out there, and we need to make sure we capture it. So here is just an illustration that I'd like to use. Everyone thinks they can time the bottom. You cannot. I'm an avid investor in real estate. I've bought and sold 17 properties throughout my 22 years now as a homeowner, and you cannot time the market. But what you can time is near the bottom. And before the bottom, sellers are more fearful, right? There's less competition of other demand. Very difficult to get the exact bottom. Investors miss it all the time. Hedge funds miss it all the time. If you're buying your first or second home, you're probably not going to time the market. What most people do is they wait until they hear things are improving, and that's after the bottom. And what you need to remember is that there's a seller on the other side, and they're going to have more confidence because there's more competition of other buyers. So when rates do go down, there's going to be more buyers that enter into the buying pool that will drive up prices. So remember, we've had 121 straight months of home values going up. It's natural to have a small pullback. Let me show you another chart. If we look at this, actually, let me go back here. This is history will tell us our future. History always tells us our future, right? So the bottom of the market was right in February of 2012. And right when it hit the bottom, we had 8% appreciation over the next year. So you can see once it hits bottom, boom, it goes up. And by the time you know about it and you're out looking, you're already paying higher home prices. So 2012 was the bottom after the financial crisis. And I lived through that time period. And yes, property values shot up. I bought a $510,000 duplex down in 2010. And in 2012, I believe it was June, I sold it for $715,000. So 510 to 715 in a 2-year time frame. So I timed the bottom. It wasn't skill. It was just my fiance, now my wife, and I had to move at that time. So what you need to know is that once it happens and once you hear about it, it is too late. The last thing I'd like to show you is some illustrations here. There we go. Remember in 2012, we had 2.4 million homes for inventory. We're coming off a big development boom. Builders were building left and right, and that's part of what caused the financial crisis. That and too loose of mortgage guidelines. Well, today, 2023, we have 980,000 homes for sale, and 40% of those are already under contract, right? So there's 1.4 million less homes over that, about 1.420, right? So there is so many less homes than we had back in 2012. And that's the most recent time that can relate to this time. So when we look at the opportunities here, let me pull this all the way out. There we go. We're doing about approximately $500,000 purchases right now. Say we put 100 down, that's 20% down. And this is different for every buyer. Interest rates has rose about 1%, right? The monthly payment increase is about $257 per month. Well, that's $3,084 a year. I believe there's about 2 to 3% opportunity to negotiate on most deals right now. So that's about a $10,000 savings. Now, we showed you in 2012, once it hits the bottom, things skyrocket up. I think that will be exacerbated and be close to 2012 because there's much lower supply than there was then. So that 8%, I think we will see that again or higher. Remember, in COVID, we had 39 to 50% appreciations in a lot of areas over a 2-year stretch. So to think that prices are going to go up another 8% isn't that far fetched. Now let's be conservative and say it only goes up 3%. You have $25,000 of savings and you only paid $3,084 more due to the higher interest rates. Right now, I believe next year we're going to be refinancing you. I think rates will land somewhere between 4.5% and 5%. So if $5,000 is high for a refinance, in most areas it's 3,500. But I don't want to skew numbers in my favor of my argument, right? The total benefit is $20,000 if you buy now in this scenario, and I think this is going to be double to triple, right? I really see this appreciation potentially on a $500,000 home being $545,000. So I will continue to beat the drum that opportunity exists right now, and by the time that interest rates have gone down, you think you hear about it right away. It's old news by the time you hear about it. Fannie Mae, Freddie Mac doesn't even release it online until the information's a week old. And when interest rates hit a low point, just like it did February 2nd, it lasted for a day. So you need to be under contract or close, and you need to know that the interest rate's temporary and you're going to refinance. So stay the course. I'm here to help you with your home search. I'm here to provide you a $5,000 pre-approval guarantee, a 15-day close on time guarantee in a lot of cases, and some appraisal gap coverage. These are the strategies that will help you win and get you a better price because the seller will be confident in us executing for you. Let me know if there's anything else I can do for you.